All right. In this video, we're going to take a look at the journal entries that will be required as a result of completing a bank reconciliation. Remember, we did the bank reconciliation in a previous video for Video Busters and the example from the textbook. And if you did, you should have the form in front of you now that has the Video Busters bank reconciliation, the bank balance, the book balance, with the resulting reconciled balance of $1845, which is in fact doesn't agree with either one of the bank that says we had $2050 and the book balance that said we had $1404.58. Once we figure out what the differences were, we agree that the balance, if everything was recorded properly by everybody, the balance of the bank would be $1,845. So what we're going to do now is look at the journal entries. Now we can't affect the bank, but we can update our records. Our records currently show that we have $1404.58, but we know the bank has given us some interest, they've collected some stuff, they've charged us some fees, and we need to update our records for that. So here's what that first set of journal entries is going to look like for those things that increased our bank account, the things the bank did for us. I've reproduced, just to remind you, our side of the bank reconciliation here. This is the book side. It's very, very tiny, but if you have your copy in front of you, it'll just remind you. The two things we're talking about are the things that increased our balance, the $485 that the bank deposited in our account and $842. So let's talk about the $485 first. If you look in the textbook, it describes that $485 as the bank collecting something on the business's behalf. And it turns out what it was a note receivable for $500. So the bank collected $500. They gave us $485 of it and kept $15 for themselves for providing the service of collecting the money. So nice thing, we never actually saw the cash. It just made its way directly into our account, and that's a good thing. We don't like cash hanging around, even in the form of checks. If we can help it, directly to the bank account is good. And so this is the entry that increases our bank by $485, just like it showed on the reconciliation. It was a plus $485, so here's cash being increased, or the bank balance being increased by $485. The customer doesn't owe us the $500 anymore, so we credit the note receivable for the $500, and the $15 is a collection expense to make up so that the debit's equal to credits. The bank charged us a fee. We used their services, $15 of their services, to collect the money. The other item was $8.42, where we earned some interest, and that increased our bank account, so we expect the cash then to go up or be debited for $8.42. Oh, I'd love $842. $8.42. And the reason was that we earned some interest, so we would credit that revenue account for interest earned for $8.42. Remember, interest, that's not what we do. It's just, this was incidental. We happened to earn some interest, so that'll be kind of other revenue that the business has earned. Well, what about the reductions to the bank account from the reconciliation? You'll remember there was an NSF check and the service charge for that, and the check printing charge. So here's what those look like. The NSF check, there was the check was for $20, and the bank charged us $10 because it's really annoying when they have to process one of these NSF checks. Remember what happened, think back to when we got the check in the first place. You didn't actually see that, but try to imagine. The customer sent us a check, and so we reduced accounts receivable, or credited accounts receivable for the amount of the payment, and debited cash because we were putting the money in the bank. But what happened was, now that check, when it got to wherever it was going, they said that's no good, and so it turns out we shouldn't have increased our bank. Now we have to take that back out of there. So that's what's happening, is we're reducing the cash. We put cash in there in the first place, we need to take it back out. So of that $30 that we see there, $20 is the check that we deposited in the first place, and now we're taking it back out. And the customer really does owe us the money. In addition to that, the bank charged us $10, and so the $10 service charge, we're going to charge that back to our customer for sure, possibly, quite potentially in real life, maybe even more. But he owes us at least the $30, and our bank goes down by $30. The other thing that reduced us was the printing of the checks. So the office supplies expense being debited for $23, and cash going down by $23, because remember, the bank took $23 out of our bank account. So we're reducing our bank account in our records by the $23, and that's the reason why. Now I want to point out that we've got, even though this was $53, we could just as easily have said cash being reduced by $53, and then 30 of that was this accounts receivable and and 23 was the expense. In Lyrics, I'm showing it this way because in Lyrics, they expect each one of those things to be a separate entry. If you try to group them all together, it'll tell you you're wrong, and you'll lose marks and you'll be frustrated, so I'll just save you that frustration. So Lyrics wants them one at a time, so we'll put them in one at a time. So what does that look like in our general ledger now? Here's our general ledger account then. It had a balance of $1404.58. If we post all those journal entries, we'd see the $485 and the $842 increasing our account, the other two things decreasing our account, and we'd end up with the $1845, which was the reconciled or adjusted balance on October 31st, that when we reconciled the bank, we agreed that if we had everything recorded and up to date, the balance should be $1845, and son of a gun, we've done it properly. There it is, $1845. So some practice, because trust me, this will be on the test and you'll want to get some practice. Exercise 9.10 and problem 9.4a from the text. Excellent examples of how to do for bank reconciliations. I'm sure you'll struggle with some of that, but because there's some curves in it. But give it a crack, and best of luck with it.